You're wrong, Josh, on taxation of Social Security. You're wrong. Oh, I could have sworn we just went through this a couple weeks ago, but I got a new email. We're going to hammer this. We're going to hammer this until, like Rush Limbaugh used to say, until everyone in the world, America, agrees with him. We'll keep hammering it. Sometimes we're going to have to sometimes I have to be like Market Watch and regurgitate videos because, and this is not a regurgitation. This is literally as of 12:30 Eastern Time on January 23rd, 2023. I don't get it. Now, I get that people don't see all my videos because I do so many. I get that. I mean, I come across new channels, which I enjoy very much. Harry Hubbard, for a matter of fact. I love his videos. He's got a huge list. He doesn't do that many new ones, but it's hard to go back through the old ones. So, anytime they can give a new take on an old topic is always good. So it keeps me employed, man. YouTube is my employer. It keeps me employed. But this one we just went through just not that long ago. All right, so here's what's his name. This guy, I think his name is Ray. You can't see his email, so you're good, right? No. I got on an email. He emailed to me on my website. Hey, Josh, thank you for your videos. Buttering me up. I'm being hard on Ray here, but we'll cut to the chase. I bring this point up because I think in one of your videos, a calculation was portrayed as otherwise from what the Social Security Administration is telling us. If I'm correct interpreting the worksheet titled Figuring Your Taxable Social Security Benefits, found on page 16 of IRS Calculation 915, Publication 915, Social Security and Retirement Income, it appears that once a married filing jointly household combined income exceeds $44,000, 85% of the entirety of Social Security is taxable. We just did this, dude. And I don't think it's the same guy. So I think this is in the ether that, Josh is wrong. Did you read my book, Ray? Did you read it? Let's see if I can't find my book on taxation of Social Security. Let's see. Oh, right here. Ray, I'd highly encourage you to buy the book, Tax Bomb in Your Retirement Account. And we'll go to, let's see, provisionally determining, let's see, this is the chapter called Determine Provisional Income. The combined income is known as provisional income. Social Security calls it provisional, combined. For some reason, financial advisors called it provisional. I don't know why. And you can see that I talked about this in detail, man, in detail. So let's see. Yeah, the easy way to avoid anyway, we talk about provisional income. I'm not sure if we talk about provisional income in here. I think I might actually. Can't remember. But anyway, be this way. All right, so if I may encourage you guys to buy the doggone book. It's only it's a pamphlet, basically, 74 pages, chock full of tables of gravy that you're not going to get anyplace else. No, Ed Slott, I like Ed Slott. He doesn't do it the way I do it because I keep it simple, straight to the point. Because I'm just a caveman financial planner. I was in the infantry, for heaven's sake. Ed Slott, I was in the infantry. Ed Slott was probably out there at University of Chicago studying for his MBA. I was just plotting away with a 7.62, freaking not wearing earplugs, and so I'm deaf as a bat, essentially. And then on top of that, I listen to heavy metal, where Ed Slott was out there in freaking Ivory Tower. I like Ed Slott. Big fan of Ed Slott, so I'm just goofing on him. Anyway, so let's see what old Ray here. So again, Ray is saying it appears that once a married couple combined income exceeds $44,000, we'll get into combined income here in just a second, Ray. For example, if the household's combined income is $100,000, from which $50,000 from Social Security, $42,000 of the Social Security is taxable. Side note, according to the worksheet, the standard deduction is applied after the Social Security taxation calculation is performed. I bring up this point because you're wrong, Josh. You're wrong. So we're just going to go into Right Capital. And I was going to go down and do a PVC demonstration, but it's too hard to set up on the computer. So let me just do it here. All right. So we're going to go here. Who we got? We got Kevin and Doris Sample. All right. Kevin and Doris Sample. And we're just going to go simply to their cash flows. And they got $99,000 of income. And we're going to see from where that income is derived, $54,000 in Social Security. All right. 36 from old Kev. $18,000 from Miss Doris. All right. Because Doris gets half of Kevin. So $54,000 of Social Security. Other income is long-term capital gains. Oh, but Josh, long-term capital gains aren't taxed. They're part of combined income, provisional income. How do we know? We're going to go to the tax sheet. We're going to go to 1040. And we're going to see what we got here. So we got $54,000 of Social Security, $45,000 of long-term capital gains. Their total income is $74,000. Their AGI is $74,000. All right, but their taxes are nothing. All right, so let's go to the taxable Social Security, which is what this guy was talking about, because he's too lazy to do it for himself. Just do it for yourself. It's not hard. I cannot tell you how many people say, why do I need how to calculate my Social Security balance? I say, don't. My channel is probably not for you. My channel is for go-getters. People who don't trust the government just saying, yeah, I trust the government. People say, no, I'm going to figure this out for myself. Because it's not hard. Dude, if I can do it, anyone can do it. I'm not all that bright. I'm just curious. And I'm not very trustworthy, frankly. Maybe it's because I'm from Maine. Either way, if I can do it, you can do it. If you need to buy my book, it's free on Kindle Unlimited. I can't remember, $5 or something like that. I can't remember. You should buy the doggone book. If you don't think you can retire on Social Security, I prove you can. Oh, it's so frustrating because this isn't hard. Just if you're going to take the time to email me after you look at the Social Security statement, did you actually plug in your own numbers? I guarantee you didn't. Plug in your own freaking numbers, dude. Gosh. All right. So what's our combined? Oh, combined income is $72,000. We take half of Social Security, $54,000 Social Security. Take half. That's $27,000. Add our other sources of income, which could even be municipal bond income, which I'll prove to you. Combined income is $72,000. We go back to what old Ray said. If your combined income exceeds $44,000, 85% of your Social Security is subject to taxation. That's incorrect. And we're going to show you because the first $32,000 is tax-free. Look, if you're married filing jointly and enter $32,000, none of that is subject to taxation. None of it is. So now we take the next $40,000 is what is going to be taxable Social Security, but I'm going to tell you why it's tax-free. All right, so we got $40,000. So we have $72,000 as their combined income. The first $32,000 is not subject to any taxation, which means we're left in $40,000. The next $12,000 of that, well, they say right here, of the $40,000, 50% of that will go to taxable Social Security. So that's $6,000 here, taxable Social Security. The remainder, 85%, will go to taxable Social Security. All right, so now what we do is we take the smaller of 85%, Ray, the smaller of the 85% or what the calculation shows. And as you can see, our taxable Social Security is $29,800. 85%, so again, we take $72,000 combined income. The first $30,000 is free of any taxes. The next $12,000, half of that is going to be taxable. So $6,000 of the next $12,000. Anything above that, 85% is subject to taxation, which would be what number right here? We got this number right here. All right. So we take the $6,000, which is the second bend point, if you will, the $32,000 to $44,000 realm, where 50% of that is subject to taxation, plus any amount above $44,000, which is $28,000, 85% of that will be subject to taxation. We add those two together, that's $29,800. We take the lesser of the $29,800 or the 85% of our total benefit. And that's what we get there. So we're going to look at $29,800. We flow back to the 1040. Oh my goodness. Oh my goodness. Watch how easy this is. Point. $29,800 is our taxable amount on Social Security. Kevin or Ray. What I say? Oh, Kevin's my guy. So $54,000 Social Security benefits. We have well over $44,000 of combined income. $29,800 subject to taxation. Oh, but guess what? Because we're still in the 12% tax bracket and none of this long-term capital gain is subject to taxation, which means the only taxable income, just gross income is $29,800, but we have a standard deduction above that, which means we have no taxes due. All right, so let's change that income. So we just destroyed Ray. All right, so let's say, oh, but Josh, he's not going to know what else to say because there's nothing else to say. I win once again. We're going to make this, can we make this municipal bond income? And let's make this, I'm not sure if that's going to be municipal bond. We'll go to the 1040. We'll go to details. I'm not sure. So that's not what I want. I wanted that to be municipal bond income. Actually, let me just double check there. Maybe it will show up on the Social Security. No. All right, so we got to make this income. There's got to be a way to make this municipal bond income. How? Let me pause it. I'm not sure how to do that. So let's make this a taxable account. And we'll say muni bonds. Instead of having the Fidelity balance account, we'll make this, let's change that. We'll delete that and we'll make it add holding. We'll make this, that was the USAT. USAT, is that what it is? There we go. Sweet. And we'll say we got $1 million in here. $1 million. Divide by 1262. That's 79,000 shares, just for simplicity. All right. And we're going to make that a taxable account. Uni bonds. Save that guy. And we're going to make a 79,000. Yeah, that looks good. There we go. And we'll make a cost basis of $1 million, just for simplicity. All right, so now what we're going to do is we're going to say, let's see what it gives us. I don't know what's going to give us for income off that. Let's take a look at our 1040. Let's see what we got. We're going to look at our 1040, and it's not giving us any tax exemptions. How do I get taxes? Hold on a sec. I'll figure this out. I just had to turn on the thing. I had it not part of the plan, so I just had to make it part of the plan, which if any of you are using Right Capital, you go here, investment, and I had it not included in the plan. Actually, what I want to do here, though, is I want to make this guy, I want to add, right here, I want to make that 200,000 shares of this, and we're going to make that cost basis, because I want to show you guys municipal bond income as well as part of provisional income. All right, so let's go down. We're going to go to 1040. All right, and we're going to look at what the 1040 shows us. Shall we? Shall we? Yes, we shall. $62,000 of municipal bond income. $54,000 of Social Security. So 54,000 times 0.85. $45,590 would be 85%. Isn't that interesting? So let's go to the right here. All right, so now we're going to show 54,000 of Social Security, 62,000 of tax-free municipal bond interest. Our combined income is 90,000 schmackes. 90,000 schmackes. All right. How much of our Social Security will be subject to taxation? The lesser of 85% of 54,000, or the three thresholds, the three bend points. So remember, bend point number 1, 0 to 32,000 is tax-free, not included in the taxable amounts for Social Security. 32 to 44, half of that amount is. In this case, because we have over $44,000 of provisional / combined income, it's $6,000. Anything above that amount will be 85% of that amount is subject to taxation. 85% of the third bend point is what was it? Right here, $46,000, of which 85% is that right there. All right, so we take $6,000 from bend point 2, because bend point 1 is 0, $6,000 from bend point 2, and the $39,512 from bend point 3. It gives us $45,512 of Social Security that's subject to taxation, which is still less than 85%. Not much, but a little bit. And you'll see we go back to 1040. 45,512. That's our only income. 45,512, because this right here, because this municipal bond income doesn't flow back to the 1040, but it does when it comes to taxable Social Security. 45,512. What is our taxes? Oh, $1,500. Wow. because 46,212, 282 is now subject to taxation. We get our first standard deduction, which means we have a $15,000 taxable income, 10% of that. All right, but that's because not because we had over 44,000 combined income, because we had about 100,000 combined income. All right, so now let's say, but Josh, you gotta make it. No, let's call it a pension income. I don't care. So we'll not include this in the plan. There we go. Now we'll have pension income. We're gonna say income. We're gonna have $45,000 from. We'll just say it's interest. We can even say it's earned income. It doesn't matter. All right, because it's all gonna go by to the combined income. And I'll show you. We go to taxes right here. All right, let's show you what our taxes look like. Here we got 45,000 of wages, 54,000 of Social Security. That's $100,000, guys, of which only 29,000 is subject to taxation. So we take 45,000 of wages plus our 29,000 of taxable Social Security. Our AGI is 74,000. Subtract our 30,000 standard deduction, and we got a taxes of $4,800 on $100,000 of income. Let's go to the Social Security thing here. I'll show you. $54,000 of Social Security. We take half that. It's $27,000. We add it to our other income. Did you see? Matters not if it's tax exempt. Matters not if it's long-term capital gain. It matters not if it's earned income. It's all going into the same thing to calculate combined income. Our combined income is $72,000, which according to Ray should make the entirety of Social Security be subject to 85% tax. And Ray doesn't know what he's talking about because he hasn't taken the time to figure out this freaking the thing. Just figure this out, dude. Figure it out. And why am I so exasperated by this? Because I just did a video on this, and I'm not sure if it's the same guy or not, but if he watched that video and is still saying, Josh, you're wrong, I'm like, dude, I literally, how do I reach these kids? How do I reach these kids? So now we got $72,000 is our combined income. All right. First $32,000 is tax-free. The next $12,000 is 50%, so $6,000 of that is subject to taxation. The next amount above $44,000, in this case is $28,000, 85% of that is subject to taxation. So we take our, that's right there, $23,800 plus the $6,000 from the second bend point. We have total taxes on Social Security at $29,800. We go back to the 1040. We bring that forward, $29,800 right there, plus our taxable wages of $45,000, and you can see our taxable income, or AGI I should say, is $75,000 essentially. So subtract out our standard deduction, and we have taxable income of $44,000, which means we're basing a 12% tax bracket, so we're going to pay a little bit less than $5,000 on $100,000 of income. As you can quickly see, it's right there. I'm going to show it to you. $54,000 is our total Social Security. 85% of that is not subject to taxation. Everybody can see this, right? Yes, they can. So even though your combined income is well above $44,000, 85% is not subject to taxation. All right, let's do one other thing once and for all, and we'll make this fun. We're going to say there's no other income. None whatsoever. Nothing there. Boink. All right, the only thing we're going to do is we're going to make, we'll just put $4,000. It doesn't matter. We'll put $4,000 a year here. I'm just lying to the software for ease to make this work. And we'll say Doris's is $4,000. Actually, let's not do that. Let's just make him 70 years old. Hold on just a sec. I'll make it. So his PIA is 3581. I was dealing with a guy yesterday with that. He's going to take it at 70. Boink. All right. And we'll make them 70 years old as well. And we'll say Miss Doris's PIA is 3581 as well. And she'll take it at 70 as well. So they're going to get max amounts of Social Security income. All right, there we go. Now let's make these guys, how old are they right now? 67, so we'll make them born in 1951 for him. And Miss Doris will make born in 1951 for her as well. So I can show you just for simplicity. All right, there we go. All right, so their Social Security should be over $100,000. Let's take a gander, shall we? Because they wait for the delayed earnings credits. Social Security Yeah, 113. All right, so we know for a fact that our combined income under how Social Security is taxed, that half of that will be subject to taxation. We know that for a fact, Jack. And if we go to 1040, we're going to see 113,000 of Social Security, only $16,000 is subject to taxation. 16,000 bucks is well below their standard deduction, so their taxes are zero. Case closed. Another win for Josh. Taxable Social Security. 113,000 is their total Social Security. We take half that. Their combined income is again well above 44,000 that Ray said is, oh my goodness, 85% is going to be subject to taxation. Come down to the first bend point here. The first 32,000 is free and clear of any tax, which means 24,000 is subject to some sort of tax. Or in terms of bring it back to 1040, the first 12,000 of this, 50% of that is, that's 6,000 bucks. The remaining about be at 12,723, 85% of that is 10,815. Add these two together, you got 16,815, which will flow back to our and which will flow. And again, you take the lesser of 85% of the Social Security benefit, or what we just did, the three bend points, and you can see a significant difference. All right, so now we go back to 1040, and you'll see, I forgot what it said, but it'll say 16,815. So basically, $100,000 of the Social Security is not even subject to taxation, and the entirety is tax-free. All right, so there you go. Enough. I mean, look, I'll answer these emails because people watch, I guess. We'll see until people are blue in the face. You know, if I get paid from YouTube for answering these emails like this, I'll do it until I'm blue in the face. It's important. But I don't like the idea of looking at the numbers in a detailed approach and then insinuating, well, you're wrong, Josh, without actually crunching the numbers yourself. Just go on TurboTax, man. Create a fake account. Go on any place to create a fake account and freaking figure it out, dude. It's easy to do, and you'll quickly see that I'm right and Ray is wrong. All right, love to hear your thoughts. We'll see ya.